Good evening, investors. Welcome back with me, Madhveshwari, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with the evening updates from Bursa Malaysia. Bursa Malaysia's benchmark index faced intensified selling pressure during Wednesday's mid-afternoon session, tracking a broader retreat across Asian markets. The downturn comes as investors navigate heightened risk of inflation and energy supply disruptions fueled by the escalating military conflict in the Middle East. By 3:05 p.m., the FBM KLCI had dropped 15.53 points or 0.90% to 1,696.42, falling from Tuesday's close of 1,711.95. The market sentiment was overwhelmingly cautious, with declining stocks vastly outnumbering stocks vastly, gainers 899 to 217. Total turnover reached 2.32 billion units, valued at 2.05 billion ringgit. The total decline mirrored a wider regional slump. Singapore's Straits Times index tumbled 2.70%, while Hong Kong's Hang Seng index fell 2.56%, as regional economies braced for the impact of rising global crude prices. Among the heavyweights, the financial sector felt the brunt of the sell-off. Maybank trimmed 22 cent to 11 ringgit 62 cent, while CIMB eased 9 cent to 7 ringgit 93 cent. Conversely, some industrial and plantation counters showed resilience. United Plantations climbed 38 cent to 29 ringgit 98 cent, and pressed metal rose 4 cent to 7 ringgit 38 cent. Active trading was concentrated in the energy and refining sectors, which often move in tandem with oil price volatility. Heng Yuan Refining surged 29 cent to 1 ringgit 64 cent, and Alam Maritime improved by 5 cent to 25.5 cent. However, other energy-linked stocks like Bumi Armada and Veles experienced slight contractions as traders adjusted their portfolios. The broader market reflected this widespread unease, with the FBM mass index sliding 125.21 points and the financial services index erasing over 283 points. Analysts suggest that the market remains in a defensive posture, waiting for clearer signs and stabilization in the geopolitical landscape. Now for some local economic news updates. The Malaysian Anti-Corruption Commission (MACC) has proposed criminal charges against Director General and Deputy Director General of Department of the Environment. The charges relate to the alleged mismanagement of electronic waste (e-waste). MACC Chief Commissioner Tan Sri Azam Baki confirmed that the investigation papers are now with the Deputy Public Prosecutor, with a final decision expected by next week. These officials were originally detained in January following a long-term investigation into abuse of power and bribery. This case is just one of several high-profile probes currently being finalized by the Commission. Azam Baki said regarding a separate investigation into the Department of Survey and Mapping, he mentioned that I have given my officers a 2-week deadline to complete and submit the findings, adding that there is no reason for further delays. Additionally, MACC shared details on another case involving 2 senior government officers suspected of stealing roughly 900,000 ringgit. These individuals are also accused of faking documents to get the government to pay 60,000 ringgit for their personal Umrah pilgrimage while they were supposedly on official business in Saudi Arabia last year. Still on economic news, the Malaysian government has assured the public that escalating conflict in the Middle East will have a minimal impact on the nation's total trade. Deputy Investment, Trade and Industry Minister Sim Sen stated on Wednesday that the government is closely monitoring the situation but remains confident in the country's economic stability. Speaking during a question and answer session in the Dewan Negara, Sim noted that trade with Iran is relatively small, totaling 2.45 billion ringgit in 2024. He explained this figure represents only 0.09% of Malaysia's overall global trade, so the impact is less than 0.1% of Malaysia's total trade. The minister was responding to concerns regarding potential disruptions to shipping through the Strait of Hormuz. He clarified that Malaysia strictly adheres to United Nations sanctions limiting trade with Iran to permitted goods such as food, palm oil, textiles and natural rubber. While Iran is a major producer of petroleum and natural gas, Sim emphasized that Malaysia does not import significant quantities of these resources from the country. Geopolitical tensions reached a new peak recently following military strikes between the US, Israel and Iran. Despite these global pressures, Sim reiterated Malaysia's commitment to a neutral and non-aligned foreign policy. This friend-to-everyone approach has been credited with keeping the nation's trade performance stable throughout 2025 and into the current year. Sim added, Malaysia remains committed to a neutral and non-aligned stance in addressing global geopolitical uncertainty. He also noted that this strategy helps the country navigate retaliatory tariffs on pressure from major global powers without losing access to vital export markets. Up next, we have some corporate updates. CP Extra Public Co. Limited, the retail and wholesale division of Thailand's CP Group, has announced that its subsidiary Lotus's Stores Malaysia Sdn Bhd will acquire the food purveyor Sdn Bhd for 1.66 billion ringgit. The deal struck with private equity firm Navis Capital will see Lotus take full ownership of the company behind several prominent Malaysian supermarket brands. The food purveyor currently operates 50 stores under 5 different banners, including the popular Village Grocer and Ben's Independent Grocer. The acquisition also includes BSC Fine Foods, Leisure Grocer, Pasaraya OTK and the Bites Shop e-commerce platform. In a filing with the Stock Exchange of Thailand, CP Extra stated that the move is designed to strengthen its retail position in Malaysia and aligns with its long-term strategy for regional growth. Since acquiring Tesco Malaysia in December 2020 and rebranding it at Lotus, CP Group has been a major player in the local grocery market. This new acquisition will significantly expand that presence, bringing CP Extra's total Malaysian network to more than 120 outlets nationwide. The transition is expected to allow the group to tap into the premium grocery segment currently served by brands like Village Grocer and BIG. The transaction is slated for completion by the fourth quarter of this year, though it remains subject to necessary regulatory approvals. Once finalized, it will mark one of the largest retail consolidations in the Malaysian market in recent years. And finally, wrapping it up with business updates. Metabrite Group Berhad has announced that its subsidiary Jesselton Concrete Sdn Bhd has been awarded a material supply contract worth approximately 15.51 million ringgit. The contract was granted by China Communications Constructions Company Sdn Bhd, a subsidiary of the Fortune Global 500 listed China Communications Constructions Co. Limited. Under the terms of the agreement, Jesselton Concrete, which is part of the Metabrite's 70% owned subsidiary, Expo Gaia Sdn Bhd, will serve as the priority supplier for ready-mixed concrete. The materials are destined for the Steel Ori Terminal project located in Sabah. The scope of the contract includes full logistics management, with Jesselton Concrete responsible for all freight and transportation risk directly to the construction site. To meet the project's demanding schedule, the company has committed to providing around-the-clock delivery services including night shifts upon request. Direct Pang Q Lim, Metabrite's Executive Director of Corporate and Strategic Planning, stated that the deal enhances the group's project visibility within Sabah's growing infrastructure sector. Pang noted winning a supply mandate from a contractor of CCCC's calibre in a meaningful validation of our operational capabilities in Sabah, highlighting the significance of partnering with a major international construction firm. Well, that's a wrap for Closing Bell Updates with me, Madhveshwari. Thank you, investors. We shall catch up in the next session. Goodbye and have a nice day.